The Orange County housing market update is crashing is an update that most people were actually expecting. And in the rest of the country, in some places, it's actually true. But right now, I'm going to go through what we're actually seeing going on in the market right now. This is your August 2025 housing market update. And I would say this as we have helped our clients this year. 185 people so far this year have already trusted our team. So this is not only coming just some data, and I'm going to share my screen over here as far as what we're actually seeing from data. And I'm going to give you context of helping hundreds of people move and having thousands of conversations. So let's go ahead and dive right in. And if you're new to this, my name is Christian. I'm a team leader and owner of Onyx Homes. We're a real estate sales team that has helped over 700 people move all over Southern California just since the year 2020. Now, I make these videos and this channel all about Orange County just so that we can help you make your next move a little bit easier so you can make better decisions. So let's go ahead and dive right in. Now, the first thing that I'm gonna do is I'm gonna go over the new listings to the marketplace. So I'm sharing my screen over here and I'm gonna pull up real live data from the MLS. I'm not even honestly sure if I'm allowed to show this, but I'm gonna go ahead and do it anyway. The first thing we're gonna look at are new listings. So this has dropped down yet again. This isn't surprising anymore. What has been surprising is that this year we are seeing fewer and fewer new listings each month through the first half, which normally we see, as you can see from last year, we see everything tick up until May, June, July-ish, and then August through the end of the year usually starts to trend downwards. Well, we started trending downwards starting in April. Now, there's still more new listings coming to the market, but we should be expecting to see more coming. We just haven't. So as you can see right over here, we are actually down 5.5% over last year. So from July to July. Now, I know this is a market update in August. The data is from July. So that is where we're at as far as new listings. Now, the second big stat that we're going to look at are actual active listings. So this is the total amount of inventory that is on the market. And this is where your big headlines are at, is that we have seen a 30% increase year over year in inventory. As you can see on a chart, if you're a visual like I am, if you're watching a video, you probably are. This chart shows it all. Peak of last year, we had 4,900-ish homes on the market. And we are blown past that at 6,100 homes on the market. Mind you, this is all Orange County data for residential homes. So if I zoom out farther though, right, let's see the real picture. So the last 3 years puts us back in 2022, which kind of sounds crazy. But this here was the peak when interest rates dramatically increased from 3 to like 8% almost overnight, is we got up to 5,500 homes on the market. And then we got really low again. And what ended up happening was people started to get used to these lower interest rates. But as prices and as uncertainty has increased, we have finally seen inventory start to rise again. Now, if you're saying, Christian, a 30% increase year over year is massive, there's so many more homes on the market, you would be 100% right. However, if we zoom out 5 years, we can start to see that in COVID, right, we had more homes on the market. But let's go out to max. So the data that this pulls from, the farthest we can go back is 2008. January of 2008 is when they started collecting this data for the MLS that we're looking at. And you can see a very different story. So what I'm gonna do is just show you annualized rolling on your active inventory. And you can see that it is so incredibly low. So this is how much inventory was on the market at the peak of the end of the world for 2008. It was 19,000 homes on the market. We have just over, if I look at right now, we have 6,100. And you can see here that the market normalizes in Orange County somewhere between 6,000 and 8,000 homes on the market. And then we hit 2020, and I think we all know what happened there. All of the housing market got gobbled up, and we got to a low of 3,300 homes on the market. So that is the number one thing that we look at as far as active listings, is that yes, this is increasing, but I want to give a gigantic grain of salt that it is, we're like finally back to normal levels of inventory, and even still on the low side of normal. So there is this huge, if you look at any of the headlines, they're saying housing market is crashing, there's so much inventory is tripled. And like, yeah, all those things are true, but use context, right? We're not anywhere near '08 levels, and people are talking as if that's the case, and it's just not even close. So that is the number of active listings. Now, I will say, major point here, and this is context from boots on the ground, is that just because there's more inventory, buyers have more to choose from and sellers have more competition. That is absolutely correct. And the big thing is, not all listings are great. We have so many buyers right now, they're complaining about, wow, there's so many more homes on the market, but they're ugly, they're overpriced, and they're unavailable. Meaning like, I can't even see the house because of some circumstance or some reason. Maybe there's a tenant in place, maybe the seller's being a pain, whatever. Ugly, overpriced, and unavailable listings are just, there's a big percentage of listings that are like that and they're not selling at all. So as we've been talking about, I'll get to this more in detail, there's two different markets and I'll talk about it more in a second. Now, the next thing I'm gonna show you is closed sales. So I'm gonna go over the last 12 months. So again, if we look at over 1 year, we're selling the same number of homes are selling this year versus last year. Why is that important? We expected, rather I expected as a prediction, that we would see more homes sell in 2025 than we saw in 2026. That has not happened at all. However, if we look at this, we are way low. The peak years of 2020 when everybody in the world wanted to move and interest rates were so low, those are gone, where we had 37,000 transactions in a year in Orange County. Well, now we're down to 20,000, which is obviously significantly less. And this is not increasing. We've been very, very flat for the last year and a half, really. But if you look all the way out to this max line, back in 2008, right, end of the world 2008, there were 18,000 transactions. Mind you, there's way more houses now, and we're at 20,000. So we are at the same, the amount of actual listings that are selling is as low as the 2008 housing market crash. So all this really says is there's not that many homes that are actually selling. And this hasn't felt that way because of how low inventory was. So now that inventory is going up and to the right, and we are seeing home sales really stay really low, that tells us that seller supply is far outpacing buyer demand because there's just not that many homes selling right now, right? So that's closed sales transactions. Now, what does that lead to next is how long does it actually take to sell a house? So when we pull median days on market, I'm actually gonna pull average for this one, and I'm gonna look on just the 1 year, is we are actually at a 50% increase. Now, a 50% increase sounds, again, massive. Take it in consideration, we're at 33 days versus last year we were at 22, right? So 11-day increase is 50%. So it sounds scarier, if you will, than it is. But again, if we zoom out, we can see that generally speaking, it's really low still. So even though this is expanding, it's going to continue expanding. Days on market is not going to shrink. It's going to get bigger. However, we are seeing this thing of two markets right now. There's this fork in the road, and sellers are choosing to be one of two different listings. The listing on this side is the one that actually sells, and the one that's on this side does not sell. The big difference, there's three things. Looks good, priced right, marketed well. And if I'm more specific there, it's looks good relative to price, priced right relative to how it looks, and marketed well. So for example, we have a house we just listed in Mission Viejo. It is a complete fixer-upper house on the inside. The outside of the house actually has fantastic curb appeal front and back. But the inside of the house is totally original. There's wallpaper, it's livable, but like the carpet definitely needs to be replaced and everything. So a fixer-upper, if you will. So does it look good? Most people would walk in and like definitely want to do something, at least carpet and paint, right? That'd be the bare minimum. So does it look good? Well, it looks good relative to price, right? So priced right. Is it priced right? This home is likely to sell for in the neighborhood of 1.3 is, let's say, fair market value. We priced it actually at 1.1 because the seller wanted to sell fast, and we wanted to make sure that it is priced right relative to how that it looks. So we went with a lower than market value marketing strategy. It looks great relative to price. It's certainly priced right because it's priced under market value. And then as far as marketing goes, if you don't already know this about us, we make a tremendous amount of content. We know how to advertise listings. We get this thing in front of as many eyeballs as possible, and we are fielding all kinds of different offers to put this thing under contract. It's not under contract yet, so I don't have any official dates, but that is the idea, is that home is gonna sell in probably 2 weeks on the market, whereas the average for that price point is more like 2 or 3 months. And it's because if you underprice, or rather if you overprice, you undermarket, and your home does not look good relative to the price that you listed at, your home's not gonna sell. And we see this all the time. Not only does it not sell, you get zero activity on it, so you're not even getting the feedback that you so desperately need in today's market, right? So that's days on market. So yes, things are sitting longer and buyers have more time to make decisions, but not on all listings. So my advice to you as a seller is take the advice of a professional. If you are not already working with somebody, ideally, preferably on our team, if you want to do that, go to the link in the description down below. we'd be happy to do a no cost, no obligation, just market analysis and a discovery call to figure out how we can help you with whatever you're trying to do. But at least make sure whatever you're doing is you are pricing the property right. You're talking to a professional and somebody that actually knows how to market. Is getting your listing out right now is incredibly important. So let's go ahead and move on. This is the thing that everybody's going to want to hear is the price. So here's where we finally saw a dip in pricing. So we peeled off of the peak that we saw last year was a new record median home price in all of Orange County at $1.23 million. We saw a $55,000 decrease down to 1.175. Now, if you look over here, you will actually see that if we look year over year, it's actually up. So if you look from July of last year, the median home price was 1.17, right? So what this tells us, and which happens every single year, is that pricing in the beginning of the year goes up until June, July, August, and then it peaks down. It starts to trend downwards for the last few months of the year. As you can see, in June of last year, we were at the peak of 1.2. Then we hit down to 1.7 or 1.17, 1.15, 1.15, 1.15, 1.15, 1.13, right? And then December hits, and then everybody waits till January to start shopping. Everybody floods the market, and then go figure, prices start increasing right back up. So we went right back up to the peak pricing. We hit a new peak this year, and now we are going to trend downwards for the rest of the year. This happens every single winter. So before we freak out, let's look at the chart again. Here's a 3-year look back, right? Here's the peak, and we're going to trend downwards. Here was the peak of last year. It trended downwards very slowly. In 2023, here was the peak here at 1.1, and then it only trended down for 2 months, right? That was an interesting one. I see 2022, the winter of 2022, I believe is going to happen again this winter. So we saw prices go up, and we hit a peak of $1,060,000, and then we saw a pretty steep pullback all the way down to December at 920. So if you looked in January at 950, December at 920, that was the biggest pullback in pricing we've seen in a very long time, and it was a very short window because, as you see, it took less than 6 months to get right back up to the peak pricing that we had before. I guess technically it took 8 months, but right there, within $10,000 in August, and within $10,000, it took 7 months for the pricing to rebound. And this is where we talk about windows of opportunity, because it's not a floodgate of opportunity. It's likely to be a very small window, right? And then here's the reality is, if you're trying to time the market, there's a quote that I absolutely love, is you do not wait to buy real estate, you buy real estate and wait. Now, mind you, with a gigantic grain of salt, that it depends on you and your unique situation. And it doesn't make sense for everybody to buy right now anyway. I did another video that maybe I'll link somewhere up here on the pros and cons of moving right now. But if we zoom out far enough, right now, median home price is 1.175, right? So a $55,000 decrease. But for those that pulled the trigger before COVID, the median home price for Orange County was $739,000. And if you want to be really sick, you can zoom out to 2008. So here's a major point I always like to make this about trying to time the market. So the very last person that bought in 2008 of April, before the market exploded, the housing market exploded. The worst, this person made the worst decision possible on when to buy real estate. And they bought in April of 2008. And they bought at $499, or rather $500, March. And then if you go to the bottom, prices went down to $355. So they spent $500, and then their home was worth $355. But if they waited, now mind you, I know a lot happened there. If they didn't lose their home, if they didn't refinance, if they didn't whatever, they just watched prices over the next, 16 years, just go tick up and up and up and up and up and up. So that person that bought their home for $500, if they held on to it today, it'd be worth $1.175. And that person that bought it for $355, my point is, do you think the person that bought it $500,000 in 2008 is mad at their home value right now? Probably not, right? So that's where we talk about, listen, unless you're looking to make a flip, if you're going to buy this home, if your plan is to live there for 2 to 3 years, we need to have a serious conversation of what do we think the market's going to happen in 2 to 3 years. Are you going to appreciate enough to even cover the costs? Or should you rent? Or if you're saying you're living in the house for 10 or 15 years and you're looking to build some wealth through it, it's hard to look at something like this and think I'm just going to wait for prices to go back to the 2000 and even 8, the peak, to $500,000 in Orange County. It's really unlikely we see prices drop more than half. So that's the price conversation. I just feel like I felt obligated to share that. And then as far as interest rates go, I don't have a visual for you here, or rather I do. I have the screenshot I'm gonna throw up here. Interest rates fluctuate all the time, so this is what is on here as of the time that I took the screenshot at 6.72, which is lower than we've seen. So let me summarize the housing market update as we've seen. I'm gonna give you the TLDR stats right here, which is for if you're watching the video so far, thank you, and like the video, subscribe to the channel. But here's the quick stats. New listings are down 5.5% year over year. Available listings, so active inventory, is up, and we're up 30% year over year, 29.6. Closed sales are actually down 5.5% over last year, meaning we are seeing fewer transactions happening this year versus last. Days on market is up 50%. Mind you, that's from 22 days up to 33. That is going to continue to increase as well too. Prices are they're down month over month, but year over year, they're actually up 0.4%, right? So flat as of where we were at last year. And then last but not least, interest rates are a little bit more affordable. So here's my summary for you as far as an action item. Sellers, if you're putting your home on the market this winter, you want to be certain that you are priced right, looks good, marketed well. And if you want to talk to an expert about that, again, link to work with us is always in the description below. But if you are buying right now and you have not talked to a lender in the last 60 days, maybe 30 to 60 days, things have gotten more affordable. And on the negotiation side, we are negotiating some killer deals for our clients, whether it be permanent or temporary buy downs to make the interest rate more affordable. We have clients that are getting closing cost credits in a big way that we have not seen in years. So if you want to learn how to do those strategies, go ahead and book a discovery call, or I'm going to link to this next video, is a home buying masterclass that goes through exactly what we do with all of our clients in what we call our buyer strategy session. So if you want to check that out, the link is going to be in the description right here and on the screen. So I hope you found this valuable. If you did, like the video, subscribe to the channel. I'll see you in the next one.